And in our top business story, the Dubai Financial Market General Index increased 12.1% to 3,531 points at the end of 2016, compared to 3,151 points at the end of 2015. At the sectorial level, indexes of 8 out of the 9 sectors featured on the DFM ended the year in the green, with the services sector rising the most by 36%, followed by the consumer staples and discretionary sector rising by 22.1%, and telecommunications sector by 21.6%. In contrast, the industrial sector dipped 16.7%. At the end of 2016, market capitalization rose by 12.3%, amounting to 337.6 billion dirhams, compared to 300.7 billion dirhams at the end of 2015. The value of shares traded during 2016 reached 133 billion dirhams, compared to 145.7 billion dirhams recorded in 2015, down by 8.7%. Meanwhile, the number of shares traded increased by 14.2% to reach 105.8 billion shares during 2016, compared to 92.7 billion shares traded during 2015. As for the sector's contribution to trading volumes, the real estate and construction sector topped the list in terms of traded value to reach 57.2 billion dirhams, or 43% of the total traded value in the market. The banking sector came next at 35.3 billion dirhams, or 26.5%, followed by the financial and investment services sector with 13.3 billion dirhams, or 10%. The value of stocks bought by foreign investors during 2016 reached 60.8 billion dirhams, or 45.5% of the total trade value. The value of stocks sold by foreign investors during the same period reached 60.4 billion dirhams, or 45.2% of the total value traded. Accordingly, the DFM's net foreign investment inflow reached 360.5 million dirhams. The chairman of the Central Department of Finance in Sharjah, His Highness Sheikh Mohammed bin Saud Al Qasmi, has revealed that infrastructure received about 30% of total government expenditures in the general budget of the Emirate for 2017, reaching some 22 billion dirhams, resulting in this budget being the largest in the history of the Emirate. The increase in infrastructure spending amounts to 7% more than in 2016. Though the budget funds economic, social, scientific and cultural sectors, he affirmed the most important priority remains investing in the infrastructure of the Emirate, along with providing social support that serves the citizens and their everyday needs. He added that the budget took into account its role in stimulating the economy of the Emirate to achieve high economic growth and guarantee the strengthening of the role of Sharjah in the national and international economic communities. The Dubai Gold and Commodities Exchange has recorded a growth of 36% over 2015. In 2016, the exchange reached its highest annual volume traded with an aggregate of 19.7 million contracts valued at $439.5 billion. The year 2016 saw substantial global volatility triggered by a series of notable events. Brexit leading to increased volumes in the euro and British pound, up 8% and 167% respectively. Indian currency demonetization, along with the US election results and the result of US Fed rate hikes, all of which had an impact on markets and volumes, culminating in the DGCX marking its highest open interest of 665,058, valued at $9.7 billion. Trading an average of 76,835 contracts per day in 2016. The DGCX also achieved its highest average daily volumes in its 11 years of operation. DGCX's currency segment was the outstanding performer in 2016, growing 34% from last year. The Indian rupee products led the growth within the currency segment, recording a substantial increase of 34% from last year. Meanwhile, the DGCX gold basket registered growth of 61% in 2016. DGCX's gold products all performed strongly, gold futures up 29% and gold quanto up 158%. The European Commission announced recently that the UAE has an equivalent regulatory regime for central counterparties to the European Union. This development will contribute to a more confident market and enhancing cross-border activity, leading to greater consolidation of markets. And in line with the UAE Vision 2021, the country's chemical industry will seek to increase its capacity over the coming years, as the Emirate is ready to host the sector's expo Arabplast early next week. At a press conference, organisers and leading sponsors of Arabplast 2017 announced that the 13th edition of the exhibition will be held from the 8th to the 10th of January at the Dubai World Trade Center. Panelists revealed that this year's edition will witness a 12% growth, with over 972 exhibitors from 39 countries expected to participate in the three-day trade show. Focusing on petrochemicals, plastics and packaging, the expo is expected to attract thousands of trade visitors with a showcase of the latest innovations and solutions. While highlighting the industry's significance, panelists also added that the sector created over 500,000 direct and indirect jobs in the GCC region, with sales volumes of over $108 billion recorded in 2015. Furthermore, figures from Gulf Petrochemicals Association revealed that the UAE had 13.7 million tonnes a year of petrochemical production capacity, with the figures set to increase in the years to come. Commenting on the exhibition, organisers Al Fajr Exhibitions revealed that Germany is the biggest international exhibitor, with 278 exhibitors confirmed this year, and considering the 2.9% increase in sales per annum in Europe, now is the right time for GCC-based manufacturers to capitalise.
It is a very highly innovative industry, especially in terms of packaging and flexible packaging, rigid packaging. This has shown a lot of innovation. And in every show, there's a introduction from various companies into packaging, what latest introduction they have, they're doing in packaging. The European industry is going to go up to about 104 billion euros by 2022, which is very sizable market share. And most of the countries like Germany, Italy, Spain, Austria are involved in this.